Welcome, everyone. This is day number 6 of 30 days of gold and silver. And day number 6 is about gold versus stocks. And do you really have to choose? So, gold or stocks, which one is the better investment? And you've probably heard people argue from both sides. One person says, put your money in the stock market. Someone else says, forget stocks, buy gold. But what if we're asking the wrong question? What if gold and stocks aren't really competitors at all? And what if they can serve completely different purposes in a financial strategy? I want to welcome you to day number 6 of 30 of gold and silver. And today, like I said, we are talking about gold versus stocks. So, yesterday on day number 5, we talked about something extremely important, purchasing power. And we discussed how $100 can remain $100 while with that $100 can actually buy changes over time. And today we're taking the next step. Once you understand that simply accumulating dollars isn't necessarily the same thing as building long-term wealth, the question becomes, well, what should I own? Stocks, gold, real estate, cash? The answer really depends on your goals, time horizon, financial circumstances, and risk tolerance. So let's start with stocks. When you buy shares of stock, you're generally purchasing an ownership interest in a company. So if that company grows, becomes more profitable, and investors place a higher value on it, then the value of your shares may increase. So some companies also distribute part of their profits to shareholders through dividends. That's one of the biggest distinctions between stocks and gold. Stocks are productive financial assets. So companies can, they can sell products, they can provide services, they can generate revenue, earn profits, reinvest in growth, potentially pay dividends, and that gives stocks long-term growth potential. So gold, on the other hand, is different, right? Gold, when you buy physical gold, you're not buying part of a company. There's no CEO. There's no quarterly earnings report. There's no dividend. Gold itself operates. It really doesn't operate as like a business, right? With gold, or it doesn't generate cash flow. So why would you want to own it? Because people generally aren't buying gold for the same reason that they're buying stocks. Gold has historically been used as a store of value, uh, reserve asset, tangible asset, a potential portfolio diversifier. So that's a different job. Now, here's one way to think about it. Stocks are generally associated with growth. Gold is often associated with preservation and diversification. Now, that's an oversimplification. Both stocks and gold can rise or fall dramatically, but it really illustrates why asking which one is better may not be the best question. So, a better question would be, what job do I need this asset to perform in my own financial strategy? And that's a much more useful conversation, I would say. So imagine I give you a basket, and everything representing your financial future has to go inside that one basket, right? Now, would you want the entire basket dependent upon one company? Probably not. Would you want everything dependent upon one asset class? Again, probably not. Now, that's the basic concept behind diversification. So don't make your entire financial future dependent upon one outcome. Someone might have cash or stocks or bonds or real estate or a retirement account, a business, gold and silver. The appropriate mix is different for every person. So there's another reason for diversification that really matters too as well. Different assets don't always react to economic conditions in exactly the same way. So there can be periods when stocks perform strongly and gold doesn't. There can also be periods when investors become concerned about economic or geopolitical conditions and demand for gold increases. But here's an important point: there is no guarantee. Gold can fall. You've seen that, right? Stocks can fall. You've seen that, right? Both can experience volatility. And diversification isn't about predicting perfectly what's going to happen next. It's about recognizing that we don't know exactly what's going to happen next, right? So, one of the biggest changes in my own financial thinking came when I stopped looking for one thing that was supposed to solve everything. I stopped looking for the one investment, the one business, the one income stream, the one asset. Instead, I began thinking about building a broader financial foundation. So for me, that includes really understanding how to create income and how different assets may help me build and preserve wealth. And that's also why I'm passionate about entrepreneurship and financial education, because I just don't want to make money, I want to understand money. And here's something I want you to write down: create, grow, preserve, transfer. Create income, grow your assets, preserve what you've built, and ultimately transfer something meaningful to the next generation. And that's how I think about wealth. Not simply how much money can I make, but what can I build that will last beyond me. Now, let's make this really simple. Stocks. Potential advantages include growth potential, possible dividend income, ownership in productive companies, but they also involve like a market and company specific risk. Gold. Potential characters include physical ownership, historical use as a store of value, potential diversification, no dependency on a company's profitability. But gold doesn't generate earnings or dividends, and its price can fluctuate significantly. So there's different tools designed for different potential purposes. Now, here's what I want you to remember from today's video today. Number one, stocks represent ownership in companies. And number two, gold is a physical asset and it doesn't generate corporate earnings. Number three, stocks have historically been used primarily for growth, while gold is often considered for diversification and wealth preservation. Number four, both do involve risk, and most importantly, it doesn't necessarily have to be gold versus stocks. For some people, the conversation may be gold and stocks. Okay, so which one are you focusing on most right now? Or are you trying to do both? If you'd like to learn about physical gold and silver and see the platform that I'm personally using, there is a link in the description. Take a look for yourself, learn, ask questions, do your research, and decide what makes sense for your financial situation. And also, make sure that you subscribe, because tomorrow we're taking this conversation into another major asset class: gold versus real estate. Now, which one does what? And could there be room for both? I'll see you in day 7. But before I go, I have a quote for you, a closing thought for you. Wealth isn't necessarily built by finding one perfect asset class. It's really built by understanding what you own, why you own it, and the role that it plays in your financial future. Guys, that's it for today. This is Billy Josie, President and CEO of Stoneleaf Ventures LLC, where we help everyday people create generational wealth and legacy through gold and silver and digital marketing. All right, guys, have a great one, and I will see you in day number 7. Bye.